Dear students, first of all, welcome to everyone in the Finance Act 2024 crash course for the taxation. And a little introduction, me, principal of Abil School of Accountancy. So far, highest marks, one of my students, she took in taxation. And after 99, I'm still waiting. Let's see who is going to break that record. So far, I did not find another student to break her record. Okay, now in this crash course, exactly what we are going to cover. So let me eliminate the curiosity. We are going to cover, inshallah, the entire course. Entire course means entire course. Obviously, we'll go through each and every rules. Okay. So let's start, and we are starting the taxation syllabus from individuals, and then we'll come to capital gain tax, IST, VAT, corporation tax. That would be the sequence. Okay, this Finance Act 2024. This Finance Act 2024 is valid for your June attempt, June 25, September 25, December 25, and March 26. Actually, one Finance Act is valid for the 4 attempts. Okay. We are starting from individuals. And let me tell you, in my focus notes, the total pages of the focus notes, they are just 79. Within 79 pages, we have covered each and every concept of taxation. So those students, they don't have time to read the entire book of 851 pages or maybe more. They can just go through my 79 pages. These 79 pages are the replacement of 851 pages. If you get a really good grip just on these 79 pages, you can easily score 70 plus marks. But if you are planning, no, sir, I want 100 out of 100, then you should read Kaplan book as well. Okay, individuals. We are starting from individuals. How individuals they pay tax in UK? Individuals actually they pay tax in UK according to the tax year. According to the fiscal year. In UK, tax year for individual starts from 6 April of the year and ends on the next 5th April. Like if the tax year is starting from 6 April 2024, it will end on 5th April 2025. How do we write the tax year? Like 24, 25. So simply individuals, they pay tax according to the tax year. Tax year starts from 6 April, ends on the next 5th April. Another point that every individual is required to pay tax in UK. The answer is yes, if their income is more than personal allowance. Personal allowance is 12,570. Whoever is having income over and above 12,570. So the income which is over and above 12,570, that income is actually taxable. Now, when we say individuals, individual sources of earnings could be non-saving, saving, and dividend incomes. Repeat. An individual could have the sources, different sources on earnings like non-saving, saving, dividend. Why do we need to categorize the different sources of income? Because for each source of income, rules of taxation, they are different. Like what comes in non-saving income, for example, employment income is a part of non-saving income, property income, your trading income. Even the pension income falls in non-saving income. Saving income is simply interest income, and dividend income is simply the dividend income. Okay. First of all, what are the tax rates? All these tax rates, the sheet which you can see right now, these tax rates, they are given to you in exam. The basic rate band is from £1 till 37,700. For non-saving, the rate is 20%. Higher rate starts from 37,701, goes till 1,25,140. Income tax rate is 40%. Then we have got additional rate. 1,25,141 plus above, then there is no limit. Applicable rate is 45. Here we got the same 20. 40 and 45. Here rates are different. That is 8.75. Then we have got 33.75 and then 39.35. Okay. For saving income, we have few additional rules. For saving income, we have few additional rules. For saving income, okay. Number one, if an individual is a basic rate taxpayer, if an individual basic rate taxpayer, that individual gets nil rate band of 1,000 pound for the saving income. If individual is a higher rate taxpayer, how do we decide someone is a higher rate taxpayer or basic rate? We'll discuss that. If someone is a higher rate taxpayer, we'll get the nil rate band for the saving income 500 pound. But if someone is an additional rate taxpayer, additional rate taxpayer does not get nil rate band for saving income. There is one more rule for the saving income is starting rate band. There is one more rule for the saving income, which is starting rate band from 1 pound till 5,000 pound, which is 0%. When do we apply starting rate band? Just wait, we are going to discuss. Don't worry at all. Okay, when it comes to dividend income, every individual, irrespective of tax paying status, everyone gets nil rate band 500 pound. Everyone gets nil rate band 500 pound, no matter basic, higher, or an additional rate taxpayer, whoever you are. For the dividend income, you will get nil rate band 500 pound. Okay. Another thing, when an individual is having non-saving income, saving income, and dividend income also. Logically, from where do we deduct first personal allowance? From non-saving income? If you still have the personal allowance, then go for saving income, and finally we go for dividend income. And this is exactly the same sequence when we calculate income tax liability. When we calculate income tax liability, first we apply tax rates on non-saving incomes. Then we go for saving income, and finally we are going to tax the dividend income. Okay. For example, we have got Mr. Y. Employment income is 80,000 pound. And let's say this individual is having saving income also 5,000 pound. Dividend income also 8,000 pound. Pay as you earn. Pay as you earn means normally when you are working as an employee, so you are paying tax in advance. So pay as you earn, assuming the pay as you earn is 10,000. Required income tax liability, and the second is income tax payable. Income tax payable. Okay. We know that employment income is a non-saving income. So let's try. Non-saving income, saving income, dividend income, and there's a column of total as well. I'm just writing directly to save the time. Employment income is 80,000. Of course, non-saving income. Saving income is 5,000. Dividend income is 8,000. So we have got 13 plus 80, 93. Because if you add 5 plus 8 becomes 13 and then 80, 93. Okay, now personal allowance, as I mentioned earlier, will be deducted from the non-saving income, 12,570. Okay, now first questions, let me answer that. While the crash course, I will keep giving you the examination tape. Number one question, which majority of the student they ask, sir, can we use the abbreviation? Like instead of writing the entire personal allowance, can I write PA? No need to write the complete personal allowance. If in the same question you will be writing 3 or 4 times personal allowance, then if you have written 1 or 2 times the complete personal allowance, after that, if you want, you can use the abbreviation. Otherwise, not recommendable at all. So this was the question, can we use abbreviation? The answer is not recommendable at all. And it does not consume so much time as well. Don't worry at all. Taxable income. 80,000 minus 12,570. Students, I am getting 67,430. So let's see. The final answer is 80,430. Now let's calculate income tax. Students, first we will apply the tax rate on non-saving income. 37,700 into 20%. So 37,700 into 20%. I'm getting 7,540. Now, please, your non-saving income total is 67,430. Total taxable non-saving income is 67,430. Out of that, students, please come here, come here. Come on. Saving income, nil rate band. Dividend income, nil rate band. There's no such concept for the non-saving income. Did I discuss anything for the nil rate band for non-saving income? No. Nil rate bands are associated with the saving income and dividend income. They are not associated with the non-saving income. Please. Okay, please. From 67,000, let me complete the question and then I'll be taking your questions. From 67,430, let us minus 37,700. Student, I am getting the balancing figure 29,730. What I did from 67,430, I deducted 37,700. So I got 29,730. That falls in higher rate. Applicable rate is 40%. So if I take 40% of this, I'm getting 11,892. Now, non-saving income, we are done. Now we are moving towards saving income. Please now listen to me carefully. Before applying the nil rate band for the saving income, we have to check the individual's tax paying status. Please focus on the last column. Total taxable income. Total taxable income. Can I say the total taxable income is actually more than the basic rate band? The total taxable income of this individual is 80,430. which is of course more than the basic rate band, plus it is not exceeding the high rate band. So by looking at 80,430 taxable income, we can decide this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer for the saving income, students, how much nil rate band is available? How much? 500. Great. So saving nil rate band. 500 into 0. You will get 0. Now please, your total taxable saving income is only 5,000. Out of 5,500 we have taken in the nil rate band. Of course, remaining 4,500 they fall in the higher rate band because basic rate band is fully utilized. Applicable rate is 40%. 4,500, let's apply 40% on that. I'm getting 1,800. Now we'll move towards dividend income. Can I say for dividend income, irrespective of individual's tax paying status, everyone gets the nil rate band 500. Dividend nil rate band 500 into 0% is 0. Now dividend income, out of 8,500 we have taken in the nil rate band, so we are left with 7,500. Of course, 7,500 falls in high rate band where applicable rate is 33.75%. So 7,500, let's take 33.75% of this. Students, I am getting 2,531.25. So just ignore 0.25. Please, you people also try to solve with me. So here comes your income tax liability. $7,540 plus $11,892 plus 1,800 plus 2,531. Students, I'm getting 23,763. This is his income tax liability. This individual has already paid, pay 10,000, pay as you earn. The tax which this individual has paid in advance, that is 10,000. Still, how much he has to pay? Income tax payable. I'm getting 13,763. Okay. Now, employment income is 15,000. Saving income is 20,000. Dividend income is 5,000. Required income tax liability. I want everyone to solve this. Everyone. I want everyone to solve this question, please. I'm giving you guys 3 minutes. Please. Okay, let's solve together. Non-saving income. Obviously, then I'll go for saving income. Dividend income. Total. Obviously, employment income is a non-saving saving income. Saving income is how much? 20,000. Dividend income is 5,000. So I've got 15, 25, 40. Of course, I'll deduct the personal allowance from non-saving income 12,570. Taxable income. 15,000 minus 12,570. Students, I'm getting taxable income 2,430. Then 20,000. 5. 27,430. Of course, first we have to tax non-saving income. Non-saving. 2,430 into 20%. 2,430 into 20%. Students, I'm getting 486. I'm getting 486. Now, please listen carefully. Very important concept now. Look at the column of non-saving income. After deducting the personal allowance, if your taxable income is less than £5,000, only then starting rate band for the saving income comes into action. Repeat. If taxable income in the column of non-saving income is less than £5,000, only then starting rate band issue will come. Come, look at this. Non-saving income, whatever it is, I have deducted the personal allowance. I'll get taxable income. I'm talking about this taxable income. And let's say taxable income and starting rate band, just to make few things clear. If number one, in the column of non-saving income after deducting the personal allowance, if your taxable income is greater than equal to £5,000, repeat, in the column of non-saving after deducting the personal allowance, if your taxable income is greater than equal to £5,000, then you will not get any starting rate band. Second, if your taxable income, I'm assuming your taxable income is 2,000. If your taxable income in the column of non-saving after deducting the personal allowance, if it is 2,000, you will get a starting rate band 3,000 for the saving income. If your taxable income in the column of non-saving after deducting the personal allowance, for example, it is 1,000, you will get a starting rate band 4,000. If taxable income is, let's say, 4,000, you will get a starting rate band 1,000. If your taxable income is 4,500, you will get a starting rate band 500. I hope now it is very, very clear when and how much starting rate band you will get. Now come here. The taxable income in the column of non-saving is 2,430. So how much starting rate band is available? From 5,000, I will deduct 2,430. Starting rate band, saving income, I'll get 2,570. into 0% is 0. Now I will check how much nil rate band is available to the saving income. By looking at 27,430, we can say that this individual is a basic rate taxpayer. Obviously, whoever is a basic rate taxpayer gets nil rate band 1,000 for the saving income. Saving nil rate band 1,000 into 0% is obviously 0. Now listen, your total saving income is 20,000. Out of that 20, we have taken 2,570 in the starting rate band, 1,000 in the nil rate band. So how much is left? 20,000 minus 2,570 minus 1,000. Student, we are left with 16,430. Saving income, of course, falls in basic rate band. I'm getting 3,286. Now we will move to the dividend income. Of course, we know that in case of dividend income, everyone gets nil rate band for the dividend income, £500. So dividend income nil rate band. Nil rate band dividend income. £500 into 0 is obviously 0. Total dividend income is 5,000. Out of that 500 we have taken the nil rate band. So remaining 4,500 falls in basic rate where applicable rate is 8.75%. 4,500 and let's apply 8.7. Students, I'm getting 393.75. So make it 394. So let's see who is having the same result. 486 plus 3286 plus 394. Students, I'm getting 4,166. So let's see who was having this result. One student, yes. Two students got the same result. I hope now it is clear to everyone how to utilize the starting rate band, especially this explanation will give you a really good understanding when and how much starting rate band is applicable. Okay, now. There's one concept, and name of that concept is pension. There are two types of pension in your taxation syllabus. One is occupational pension plan, occupational pension scheme. Another is personal pension. Just a little idea, then we'll be focusing on personal pension. Logically, in UK, I would say majority of the people in UK, they are just worried about their retirement age. They know that normally on their retirement age, they will be alone. They need money. So they try their best to get a really good pension scheme so that they should not be having any problem in their retirement age. Okay. One is occupational pension plan. Occupational pension plan means assuming you are working somewhere and your employer is running a pension plan and you are contributing into that. That is occupational pension plan. When an employee contributes in occupational pension plan, it is a deductible expense for the employee, and that contribution by the employee into occupational pension plan actually reduces employment income of the employee. Okay. If your employer is contributing for you either in occupational pension plan or a personal pension plan, then whatever your employer is contributing for him on the behalf of employee, it is an exempt benefit for the employee. Okay. Right now we are discussing personal pension scheme. Now, just a simple example, what is this personal pension scheme? Assuming individual has taken the insurance policy, because You cannot become a member of occupational pension plan until unless you are an employee, number one. Number two, your employer is running that pension plan. Only then it is possible you will be a member of occupational pension plan. But personal pension plan is available to everyone. Now, personal pension plan. Now listen carefully. As I just given you a little idea, people in UK, they are worried about their retirement age. So they try their best so that choose the pension scheme so that when they reach on retirement age, they should not have any issue at all. That is why HMRC also encourages them, because everyone could not be an employee. And even you are an employee, not necessary that your employer is running the occupational pension plan. Now what to do? Personal plans are there. HMRC, the UK taxation authorities, they encourage people to contribute in personal pension plan. So they do provide incentives to the individual. Now, what are the incentives or what are the advantages when someone is contributing in personal pension plan? Now, listen. Number one advantage is whatever individual pays, that is treated as 80%. Logically, 20% is paid by HMRC. Just what is the meaning of this thing that whatever I'm paying, it is 80%, 20% is paid by HMRC? Just an example, okay? For example, there is a bank account. Now, some of the students, they just think, sir, where is the benefit? If we are paying 80%, 20% is paid by HMRC, so where is the benefit? Let me explain that. Assuming I'm just giving you the example, okay? Assuming you have deposited 10,000 pound into the bank. How much you have deposited? 10,000 pound. If you deposit 10,000 pound, and just because of this that you have deposited 10,000 pound, HMRC for you in the same bank contributes 2,500. You have given 10,000 pound to the bank, but bank informs you in the evening, sir, actually your contribution is 12,500. So for a minute, you will be surprised that in the morning I just deposited 10,000 pound. How it is possible 12,500? So at bank, let's say, informs you, bank gives you the information that 2,500 on your behalf, HMRC has deposited. So obviously it's a benefit for you. This is exactly how personal pension plan works. Assuming you have given to the insurance company 10,000 pound. So you have contributed 10,000 pound and you have given 10,000 pound to the insurance company. HMRC will give 2,500 for you on your behalf to the same personal pension scheme. So now your amount with that pension plan will grow, and 10,000 will not grow. 12,500 will grow. So that's a benefit. Just try to think that whatever you are paying, HMRC says it is 80%, 20% we will pay for you. That's an obviously advantage. Second advantage, basic rate band is ends at 37,700. Higher rate band. Higher rate band actually ends on 1,25,140. Okay, let me just tell you. What is the second advantage? According to HMRC, gross personal pension contribution, not your actual contribution. Gross. Gross means whatever you have paid, it is 80%. I will make it gross. I'll bring your 80% at 100%. Whatever you have contributed, I will take that amount, multiply by 100, divided by 80. With the gross PPC, basic rate band and higher rate band limits will increase. Another advantage is with this gross PPC, your basic rate band and higher rate band, both will increase. And let me tell you, HMRC cannot say this only, okay, due to your gross PPC, we will only increase the basic rate band. Now listen to me. If HMRC says we will just increase your basic rate band, then it's not an advantage for me. I will end up by paying more tax. So HMRC is bound to say that with your gross PPC only basic band will not increase, your high rate band will also increase. Why? Just for your knowledge, otherwise we'll go ahead. Just see the difference, okay? Don't go in plus minus difference. What is the difference between these two limits? 1,25,140 minus 37,700. Student, the difference is 87,440. Logically, listen to me. In your high rate band, the amount which get taxed is 87,440. No matter there's a gross PPC or not. For example, the gross PPC is 12,500. Let's see what happens. I'll add 12,500 here. I'll add 12,500 here. My basic rate band 37,700 plus 12,500. It will become 50,200. Your higher rate band 1,25,140 plus 12,500. Now, if you again take the difference, you will exactly have the same difference. So basically, why HMRC says just do not only increase basic rate band, because HMRC knows that they will have to give you the permission to increase higher rate band as well. Otherwise, individual will not go towards gross PPC. Logically, either there's a PPC or not. The amount which falls in high rate band, that is technically the total amount remains same, which is 87,440. Okay. But keep that second point as an advantage, that by gross PPC, your basic and high rate band will increase. There's a third advantage also. Gross personal pension contribution. Gross personal pension contribution reduces adjusted net income. Now the question is, if gross PPC reduces adjusted net income, so what is the benefit? Number one. Number two, how do we calculate adjusted net income? So let me answer both the questions. First of all, A and I, adjusted net income, how do we calculate? We'll take net income. From this net income, actually, I will deduct gross personal pension contribution. Now listen to me carefully. I will also deduct gross gift aid donation. Tax implication of gross PPC and gross gift aid donation, they are exactly the same. Less gross gift aid donation. And let me explain now again. Let me repeat. Tax implications of gross gift aid donation and gross PPC, they are exactly the same. You will get adjusted net income. Now listen, if adjusted net income is less than equal to 100,000 pound, then entire personal allowance 12,570 is available. If adjusted net income exceeds 1 lakh, then your personal allowance will reduce. In fact, if adjusted net income becomes equal to greater than 1,25,140, logically personal allowance becomes zero. How? Personal allowance is 12,570 less adjusted net income minus 1 lakh into 50% or 1/2 is the same thing. Minimum personal allowance could be zero, it cannot be negative. Minimum personal allowance could be zero, it cannot be negative. Okay. Assuming we are having employment income, 1,20,000. Personal pension contribution is 10,000 pound. Nothing is mentioned student, then it is always net. You have to gross it up. Required. My first question is give me the amount of personal allowance which is available. And the second is income tax liability. Please, I want everyone to calculate this. Please, can you see the format? From net income, we deduct gross personal pension contribution, we deduct gross gifted donation. We deduct both of them. But if in the question, any one of them is available, then what are you going to do? You will deduct the one which is available. If both are available, will you deduct one of them or both of them? Students, please reply. If examiner gives you the gross PPC and gross gift, both, what are you going to do? So obviously you will deduct both of them. One is available, I'll deduct one of them. Both are available, I'll deduct both of them. I hope it is clear. I want everyone to please calculate. I'm giving you around 2 minutes. I need personal allowance and I need income tax liability. I want everyone to attempt this, please. Now let's try together. Number one, I have already mentioned, if nothing is mentioned, the given PPC is always net. You have to gross it up, okay? If there's only employment income, so it works as a net income. There's no other income. We will deduct gross personal pension contribution 100 or 10,000 100 upon 80. We'll get 12,500 if I'm not wrong. One zero seven five hundred. Okay. Can I say your ANI is more than 1 lakh? So personal house is 12,570 less. One lakh 7,500. Okay, any answer? Either you take 1 upon 2 or 50%. It's the same thing, okay? Student available personal allowance is 8820. Okay, now let's see the income tax. Obviously, the basic rate band, which is normally 37,700, it will increase by 12,500. So basic rate band will be 50,200. Basic rate band will be 50,200. So 50,200 into 20%. Simply 1 lakh 20 minus 8820. 1 lakh 20 minus 8820. The taxable income is 111,180. So 50,200 into 20, I'm getting 10,000. Total taxable income is 111,180 minus 50,200. I'm getting 6,980. Student, please check everyone is getting the same result or different. Your income tax liability is 34,432. Okay, that's great. That's nice. Okay. Now just quickly come in. Okay, just a minute, just a minute. Now, quickly, qualifying loan interest. If someone has taken a loan for a qualifying purpose, then interest paid on a qualifying loan is deducted from the total income. Interest paid on qualifying loan is actually deducted from the total income. Now there's one more question. Okay, in the main presentation, I have deducted the qualifying interest from the total income. But when I'll be calculating the income tax liability, then what to do? Then qualifying interest will be actually deducted from the non-saving income. But you need to know what are the qualifying purposes. Qualifying interest paid gross deducted from the amount paid in the tax year. Maximum deduction may apply. Qualifying loan is loan to contribute into a partnership. Stop. Someone has taken the loan to contribute into a partnership to become a partner in the partnership. On that loan, whatever interest that individual is paying, that is a qualifying interest. And that qualifying interest logically will not be deducted from the trading profit. Actually, it will be deducted from the total income of that individual. So if you have taken a loan and you have utilized that loan to become a partner in the partnership, that is a qualifying purpose. Second, you have taken the loan and from that loan, you have bought shares in a closed company. Student, closed company is a company where less than equal to 5 shareholders, they have got control. Closed company is a company where less than equal to 5 shareholders, they have got control. Control means their holding is more than 50%. That company is in UK and it could be in European Economic Area. But a closed company is a company where less than equal to 5 shareholders, they have got control. Plus, if all the shareholders, they are directors, then there is no restriction of 5 number. It could be any number. Another point, someone has taken the loan and from that loan, that person buys shares in an employee controlled company. There's an organization which is controlled by employees, means employees, they have got more than 50% holding in that company. And you have taken the loan to buy the shares of that company. Again, it is a qualifying purpose. The last one is very important. Enable an executor to pay IST on an death estate. Actually, death tax is paid by donee. But when it comes to death estate, executor actually will have to pay IST. Actually, executor is not going to bear it, but he has to pay. Now, assuming executor does not have the money to pay IST, now what to do? Let's say executor has taken the loan to pay IST on an estate. That is also a qualifying purpose. An interest paid on that loan is a qualifying interest. But I want to say one thing. It is the qualifying interest. But can I say logically only for 1 year? The last point. Logically, your loan is for a qualifying, you have taken a loan for a qualifying purpose. Whatever interest you are paying, it is a qualifying interest and it will be deducted from your total income, but logically only for 1 year. Now here, technically your qualifying interest will not be every year because try to understand, someone has taken the loan just to pay IST on an estate. That's it. Student, for a multiple choice question, you need to know the qualifying purposes. That is the whole objective to discuss this. Personal allowance ANI. Now, this is adjusted net income format. Net income, gross gifted donation, gross personal pension contribution. If your ANI is less than 1 lakh, no issue at all. Entire personal allowance is available. If it is 1,25,140 or more, your personal allowance becomes 0. Okay. Logically, if someone is having income more than 1 lakh and between 1,25,140, personal allowance will reduce by 50%. Okay, there's a concept of transferable amount of personal allowance, or another name is marriage allowance. Now listen, husband, wife, actually between husband and wife, there's a concept of transferring the marriage allowance. But listen, marriage allowance is only applicable when both husband and wife both are basic rate taxpayers. Repeat, marriage allowance is only available when husband and wife both are basic rate taxpayers. And second, one of them is not in a position to utilize his or her own complete personal allowance. In that case, we advise them to transfer 10% of your personal allowance, 12,570. If you take 10% of that, obviously it comes 12,570. But instead of this, HMRC says take 1,260. Now listen, exactly 1,260 will be transferred, no less, no more. It is not like that someone is unable to utilize the personal allowance only 500 and that person says, okay, let's transfer personal allowance 500. No, 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 no. Exactly 1,260 will be transferred. And how this 1,260 actually works, this 1,260 will not increase the personal allowance of a recipient partner. Actually, what are you going to do? You will simply calculate the income tax liability of a recipient partner. After calculating the income tax liability of a recipient partner, you will deduct marriage allowance relief, which is 1,260 into 20%, 252. Simply recipient spouse, recipient partner, income tax liability will be reduced by 252. If both are basic rate taxpayer, then they can transfer personal allowance 1,260 to each other called marriage allowance. Spouse civil partners receiving the marriage allowance do not have to increase personal allowance. Instead, income tax reduced by 252. If income tax liability is less than 252, it cannot create the repayment. If recipient partner income tax liability is 100, after deducting 252, you cannot get the refundable. It can be 0. Income, so 250, reduction of 252 can bring income tax liability of a recipient partner to 0. It cannot create actually refundable. That is again very important. Donations. Donations under payroll deduction scheme paid gross deducted from employment income do not extend bands. If simply you need to know one thing, if your examiner says Mr. Y, who is an employee and he has contributed into payroll deduction scheme, just deduct that amount from the employment income. That's it. Donation under gift aid scheme, we know that under gift aid, exactly the same tax consequences which we have in personal pension scheme. Okay, taxation of spouse and family. Now listen. Again, is in case of husband and wife, if there is any jointly owned asset, if income is coming from jointly owned asset, their income will always be split 50-50 irrespective of actual ownership. But if the couple they want that earnings should be distributed according to the actual ownership, then it is only possible when both of them make the election, both of them go to the HMRC and declare their actual ownership. In that case, income from the jointly owned asset will be allocated according to the actual ownership. Otherwise, it will remain 50-50. Nothing is mentioned. Whatever income is coming from the jointly owned asset, most of the time it will be a property, I would say. So nothing is mentioned. Whatever is the actual ownership, we will split the income into 50-50%. However, election is available for actual proportion of income and to be assessed on each partner by declaration to HMRC. Children, all children are taxable person and required to pay income tax if their income is above what? Personal allowance. If their income is more than personal allowance, they have to pay income tax. Okay. So students, here we are taking a 10 to 15 minutes break, and within 15 minutes break, within 15 minutes, inshallah, we will resume the class. So try to stay online because so within 15 minutes, we will resume the class. Okay, so let's resume the crash course class. We know that I've given you the example of we have discussed occupational pension plan and personal pension plan. Now, there's one more concept. The name of the concept is annual allowance. Till tax year 22-23, the limit was 40,000. Now limit has become 60. Now listen. Annual allowance limit for the pension is now 60,000. Now what do you mean by this? And this 60 is applicable from 23-24 onwards. Right now, our relevant tax year is 24-25. But before 23-24, applicable annual allowance limit was 40,000 pound, which you should know that. Now, what is the meaning of this annual allowance? Now, listen. Maximum an individual can contribute into the personal, into the pension scheme, either occupational pension plan, personal pension plan, any one of them, even both of them. It is up to you how much you want to contribute. But don't forget one thing. If your contribution exceeds the limit, if your contribution exceeds the limit, that additional contribution is called annual allowance charge. It is treated as other income. On that other income, you will have to pay tax, and applicable tax rates, they will be from the non-saving income. Now the question is, how do we consume this annual allowance limit? It will be consumed, for example, less gross PPC of the individual. If individual has contributed into the personal pension plan, assuming individual is an employee, I'm just assuming, and that employee is also contributing in occupational pension plan. If this is the case, your annual allowance limit will be utilized, will be consumed, less employee contribution in occupational pension plan. If your employer is contributing for you either in personal pension plan or in occupational pension plan, in any one of them or maybe both of them, employer contribution is simply deducted, less employer contribution for employee. Okay, don't forget this. Now, either employer is contributing in personal pension or in occupational pension plan, or maybe both of them, but normally employers, they're not so nice. Just think as an employer, if I'm running my own occupational pension plan, then logically, why would I go for personal pension plan for my employees? Are you getting this point, students? So normally what happens, normally, either it will be personal pension contribution or it will be occupational pension plan. But if your employer is so nice, he's contributing, which logic does not make sense at all. But if your employer is saying, okay, I will contribute for you in the personal pension plan and occupational pension, both of them. So, okay, thank you very much. Both of the contribution will utilize my annual allowance limit. But normally, again, I'm telling you, just think from an employer's perspective. Logically, if employer is running occupational pension plan, so employer will not contribute in PPC for the employee. Okay, now final answer. If the final answer is negative, it means your contribution is more than the limit. If your answer is positive, it means your contribution is less than the limit. Number one, if it is positive, it means annual allowance is unused. Now listen, unused annual allowance is carried forward for 3 tax years. For 3 tax years. and used on FIFO basis. Used on FIFO basis. And if contribution is more, means actually you have contributed more than your annual allowance limit. Additional contribution is called annual allowance charge. And this annual allowance charge is actually becomes your other income. On this other income, you will have to pay tax. And from where you will be getting the tax rate? From the non-saving income. And you will pay tax on this other income at the end. So repeat, annual allowance limit is 60,000 pound from tax year 23-24 onwards. If the contribution is less than annual allowance limit, unutilized contribution is carried forward for 3 tax years, utilized on FIFO basis. If you have contributed more than the limit, then there will be annual allowance charge, and on that annual allowance charge, you will have to pay income tax, and applicable tax rates, they will be from the non-saving income. Another thing is, all these rules, yeah, recording will be uploaded, don't worry at all. The recording will be uploaded on the portal, and first 2 classes will be uploaded on the YouTube channel as well, but rest of the classes will only be available to the registered students. Okay, now come here. But entire live crash is free for everyone, whoever can come and join the live class. Okay, students, if your contribution is more than, okay, when these rates are, when these rules are applicable, then unused can be carried for 3 years. If you have contributed more, it becomes annual allowance charge. Now listen carefully. All these rules are applicable when an individual becomes the member of a registered pension scheme. If someone is not a member of registered pension scheme, then these rules are not applicable. Registered pension scheme in our syllabus in taxation, there are 2 registered pension schemes. One is personal pension plan, another is occupational pension plan. There's a possibility that it is the first year of an individual to become a member of a registered pension scheme. It does not mean that previous unutilized limits are available. No. All these rules are applicable when an individual is a member of registered pension scheme. Okay, now I want everyone to solve this question. Assuming employment income is 200,000 and Mr. Y, who is an employee, gross PPC is 1,20,000. Required is income tax liability. Mr. Y does not have any unused annual allowance limit brought forward. He does not have any unused annual allowance limit brought forward. I want everyone to attempt this. Please, I'm giving you guys 5 minutes. You have 5 minutes. Okay, student, let's try together. Obviously, you can see that employment income is 2 lakh, gross PPC is 120, so ANI is less than 1 lakh. Can I say when ANI is less than 1 lakh, entire personal allowance is available? Is this clear to everyone? If I deduct 120 from here, I'll get adjusted net income 80,000, which is less than 1 lakh. When my adjusted net income is less than 1 lakh, so obviously I'll get entire personal allowance, and entire income is a non-saving income. So, okay. Let's try. Personal allowance 12,570. Taxable income 200,000 minus 12,570. Student, I'm getting 1,87,430. Obviously, the basic and higher rate band will increase. Basic rate band is 37,700 will increase by gross PPC 120. Higher rate band is 1,25,140 will increase by gross PPC 120. It is categorically mentioned it is a gross personal pension contribution. Otherwise, we have already discussed. Nothing is mentioned. It is always net. We have to make it gross. But student, if the question says gross, then please take it as a gross. No need to be over smart. Then your examiner, please. I'm getting 1,57,700. 1,25,000, 140 plus 120. 2 lakh. 45,140. Great. Income tax liability. 1,57,700 into 20%. 1,57,700 into 20%. Student, I'm getting 31,540. Total taxable income is 1,87,430. Out of this 1,87,430, we have applied tax rate on 1,57,700. So take the difference. 1,87,430 minus 1,57,700. Difference is coming, student, 29,730. Applicable rate is 40%. 11,892. But story does not end here. Annual allowance limit is how much? 60,000. Previously, this individual does not have any unused annual allowance limit. So available annual allowance limit is only 60,000 pound. Okay, I have a question. First reply me. Assuming, okay. Individual is having unused, brought forward annual allowance limit as well. My question is, which annual allowance limit you will be using first? Is it the current year annual allowance you will be using first before going towards brought forward unused, or will you go for brought forward first? Current year is the first. Great. Current year first. Okay. Annual allowance is 60. And look at this is gross PPC. Gross PPC is how much? 120. Does not have any unused annual allowance limit. Gross PPC. Can I say gross PPC is far more than the annual allowance limit? So that this 60,000 will be your annual allowance charge. This annual allowance charge actually it is your other income. On this other income you have to pay tax, and tax rates are from the non-saving income. Now please, and don't forget one thing. 187,430. Okay, don't forget one thing. We have already taxed, please. We have already taxed 1,87,430. Okay. And higher rate band ends at 2,45,140. Now listen to me carefully, please. Right now the taxable income is 1,87,430. Logically, when I'm going to add 60,000 to this, what is this 60,000? Other income. Take it as an other income. Let's see what will be the total taxable income. 1,87,430 plus 60,000. We are getting 2,47,430. We are getting actually 2,47,430. Can I say this individual now actually exceeding the high rate band? Some of the income, I'm not saying the entire income. The difference between these two actually falls in additional rate. Yes or no? Please reply. Logically, 2290 falls in additional rate band. 2290, is that clear to everyone? That 2290 of annual allowance charge actually falls in additional rate and applicable rate will be 45%. Now come here. 2,45,140. From 2,45,000, 2,45,140. 2,45,140. I will deduct 1,87,430. Student, difference is coming 57,710. This is annual allowance charge. On this 57,710, we will apply 40%. Now, logically, total income becomes how much? 2,47,430. Difference actually falls in additional rate. 2,47,430 minus 2,45,140. Student, the difference is 2290. Annual allowance charge. Applicable rate is 45%. Student, I'm getting 1030.5. So make it 1031. Let's see the income tax liability and let's see who got the correct answer. 31,540 plus 11,892 plus 23,084 plus 1031. Students, I'm getting 67,547. And let's see who was having the same result. There's one result is already available, 67,547. Nice. Is this clear to everyone, student? Please reply. I hope it is clear to everyone. Yes, thank you. Now, one more concept relating to the annual allowance. Now listen. Annual allowance limit from tax year 23, 23, 24 onwards, now it has become 60,000. Now listen to me carefully. This annual allowance limit, which is 60,000, this 60,000 limit also reduces when two conditions are met. Repeat. This annual allowance limit of 60,000 pound also reduces when two conditions are met, but it never becomes zero. We know that personal allowance becomes zero, but annual allowance cannot become zero. The minimum annual allowance you will still get is 10,000 pound. It cannot be less than 10,000 pound. Now come here. If the threshold income is more than 2 lakh, just you take threshold income like an adjusted net income. The calculation of threshold income is not examinable in taxation, but it is in your syllabus, okay? You need to know the limit. The limit is threshold income is more than 2 lakh. Threshold income is simply your just take it like a adjusted net income. If your threshold income is more than 200,000 and your adjusted income is actually more than 260. Repeat. When threshold income is more than 200,000 and adjusted income is more than 260, then annual allowance limit reduces. Logically, how do we calculate threshold? Total income less individual personal pension contribution gross PPC. But threshold income will be given to you in exam. Don't worry at all. In exam, in taxation, you just need to focus on adjusted income. How do we calculate adjusted income? That is important. Take the total net income plus means add individual occupational pension contribution plus any employer contribution either in occupational pension or personal pension scheme. First of all, you have to take the net income of the individual. Within that net income, add employees contribution in occupational pension plan, add employer contribution in any one of the schemes. Employer's contribution. As I already discussed, either your employer will be contributing in occupational pension plan or personal pension plan. Again, sir, if your employer contributes in both of them, logically it does not happen. If he contributes in both of them, then add both of them. Simple as that. Because I need to add employer's contribution. You will get adjusted income. If your adjusted income is more than 260, threshold is more than 2 lakh, then your annual allowance limit, which is 60,000, it reduces. The formula is 60,000 less adjusted income minus 260 divided by 2. And when your adjusted income is actually 3,60,000 or more, then your annual allowance will be 10,000. Annual allowance cannot become zero. Repeat. Annual allowance cannot become zero. The minimum annual allowance which you will be getting is 10,000. It cannot be zero, but we know that personal allowance can become zero. But when it comes to annual allowance, so annual allowance will not be zero. Okay. Let's come here. I'm giving you an example. I want everyone to please quickly solve this for me. Assuming employment income, let's take annual salary. 2,04,000. Okay. What else? Give me a minute. Let me write the data. Just a minute. Annual salary is 2,04,000. Okay. I'm just, of course, we did not discuss the employment income, so I'm just writing directly. Assuming accommodation benefit. Examiner is very nice towards you. Examiner has given you the accommodation benefit 4,141. Okay, fine. Accommodation benefit is given to you. What else? Gross PPC. Gross PPC is 1,20,000. Gross PPC is 1,20,000. Okay. Any other information? Give me a minute. Okay. And this is tax year 2024-25. Previous gross PPC contribution. Tax year 22-23. It was 29,000. Tax year 23-24. It was 58. 24-25 is here in front of us, 1,20,000. Okay. Employer's contribution is 4,000 in each tax year. Employer's contribution is 4,000 in each tax year required. Income tax liability. Let me zoom out a little bit. Okay, students, I'm giving you 5 minutes to everyone. Please attempt the question. Everyone is having 5 minutes. Okay, students, let's solve this together. I think looks a good question. Annual salary is 2,04,000. Accommodation benefit examiner has given us directly, so examiner is very nice towards us here. Normally he does not, but here yes. Accommodation benefit amount is 4141. Accommodation benefit 4141. So that becomes 2,04,000 plus 4141. Student, I'm getting the total income 2,08,141. Total income, net income. Now personal allowance. Just working one. Obviously, the total income is the net income. Net income is 2,08,141. If I deduct the gross PPC which they have given me, is 1,20,000. Can I say adjusted net income is actually less than 1 lakh? Due to ANI less than 1 lakh, entire personal allowance is available. Agreed? Adjusted net income is less than 100,000, so that is why entire personal allowance is available. Here comes the taxable income. 2,08,141 minus 12,570. Student, I'm getting taxable income 1,95,571. Okay. Now let's apply the tax rates. Basic rate band, high rate band. Basic rate is 37,700 and high rate is 1,25,140. Both will be increased by gross PPC, which is 1,20,000. $37,700 plus 1,20,000. Students, I'm getting 1,57,700 and 1,25,140 plus 120. We are getting 2,45,140. Okay. Now let's apply the tax rates. Working to 1,57,700. I'll apply 20% on this. 1,57,700, 20% of this is 31,540. The taxable income is actually 1,95,071. From 1,95,571, if you deduct 1,57,700, let's see what are we getting. 1,95,571. Students, I'm getting 37,871. Applicable rate is 40%. I'm getting 15,148.4. So leave the 0.4. 15,148. Now, student, we have to check regarding annual allowance charge. Number one question is, sir, this individual is having net income more than 2 lakh. What about checking annual allowance limit will reduce or not? Can I say annual allowance limit will not reduce because adjusted net income is your threshold income. Logically, adjusted net income is less than 2 lakh. Annual allowance limit only reduces when two conditions are met, one is threshold income is more than 200,000 and adjusted income is more than 260. Here, logically, your threshold income is actually far more than 2 lakh. I told you, take adjusted income like, take threshold income like adjusted net income. So here, threshold income is less than 200,000. That is why entire annual allowance of the current year 60,000 is available. There's no reduction in the annual allowance. Okay, now we have to check availability of annual allowance and the contribution. If the contribution exceeds the availability of annual allowance, then there will be annual allowance charge. So let's check. Working 3. Now this is very important, working 3. Please come here. Examiner has given us only this information. Okay? Examiner has not given us any other information of 21, 22, only 22, 23 onwards. Now listen to me carefully. Actually, tax year 23, 24 onwards, from 23, 24 onwards, annual allowance limit has become 60,000. Previously, the annual allowance limit was 40. Annual allowance limit has become 60 from tax year 23, 24 onwards. Previously, annual allowance limit was 40,000 pound. Okay. Now, look at the working. I'm just showing the working here. It is easy. Tax year 2022-23. Logically, annual allowance limit is 40,000. Out of that 40, gross PPC is 29,000. Obviously, that 29 consumes your annual allowance limit. But story does not end here. Employer's contribution is 4,000 in each tax year. When your employer is contributing for you, that also consumes your annual allowance limit. So from 40,000, I'll deduct 29, I'll deduct 4,000. So unused limit is available from 22-23 is 7,000. Now on a very next tax year, which is 23-24, your annual allowance limit of the current year is 60,000. Okay. Minus the gross contribution by this individual is 58. Again, the story does not end here. 4,000 is contributed by the employer. Now please watch it nicely. Annual allowance limit of tax year 23-24 is 60,000. Individual is contributing gross 58. Employer is contributing 4,000. Logically, the total contribution in the tax year 23-24 is 62,000. Available limit is 60. So can I say you have contributed 2,000 more, but there's no issue at all. This individual does have unutilized limit from the previous tax year 7,000. So can I say logically this 2,000 additional contribution will utilize unused limit of 7,000. As we have already discussed, if you have got unused limit is can be carried forward for 3 tax years. Utilized on FIFO basis. Student, is that clear? That additional contribution of 2,000 in the tax year 23-24 will actually utilize unused limit of 7,000. Is that clear to everyone? Yes or no? Please reply. Okay, now listen. The current tax year is 24-25. This is the current tax year. This is your current tax year for which we are actually solving the question. Your annual allowance limit of the current tax year is 60,000. Now try to understand. Logically, available annual allowance limit, including unused in the current, is 65. But what is the contribution of this individual? Can I say this individual in the current year is contributing 120 and employer contributes 4,000? Gross PPC is 120 and employer's contribution is 4. Can I say logically the contribution is more than the available limit of 65,000? How much additional they are contributing? Can I say 120 plus 4 becomes 1,24,000 minus 65? Additional contribution is 59,000. This 59,000 is actually your annual allowance charge. And we know that this annual allowance charge is your other income. And you have to pay tax on that. And you will be getting taxation rates from the non-saving income. Okay. Annual allowance charge is 59,000. But again, a story does not end here. Please come here. Your taxable income is 1,95,571. If I add other income 59,000 into this, let's see what I'm getting. 1,95,571 plus 59,000. Students, I'm getting 2,54,571. And this 2,54,571 is actually more than higher rate band limit. It means again, one portion of annual allowance charge will be taxed at 40%, another portion will be taxed at 45%. Okay. Your higher rate band limit is 2,45,140. From 2,45,000, 140 minus 1,95,571. Students, I'm getting 49,569. Applicable rate will be 40%. This is annual allowance charge, okay? I'm getting 19,827.6. So make it 8. 19,828. Now we know that due to annual allowance charge, the total taxable income, it has become 2,54,571. Can I say from 2,54,571, we will deduct 2,45,140. So how much we are getting, which falls in additional rate? 2,54,571 minus 2,45,140. Students, I'm getting 9,431. I'm getting 9,431. Applicable rate will be 45%. Again, annual allowance charge. 9,431 into 45%. Students, I'm getting 4,243.95. So make it 4,244. So here comes your income tax liability. 31,540 plus 15,148 plus 19,828 plus 4,244. Students, I'm getting 70,760 income tax liability. Working two again, working two. Which working? Is here. Your basic rate band is 37,700. It will be increased by gross PPC. Higher rate band increased by gross PPC. Is this clear? Working two. Please check. Is that clear now? Is it clear to everyone now? Please reply. It's a really good example which we have just discussed. If you think it's not a good example, then obviously no comments. I can say this. But if you ask me, I'll say it's a really good example. To get a really good grip on this income tax liability calculation with the annual allowance charge, and something is coming unused from annual allowance unused as well. So there were many things. Just the last rule, and we will end the first class of the crash course. We know that due to personal pension contribution, bands they increase. Okay. Basically, when there's a gross PPC, basic and higher rate band will increase, but there's a rule for that also. Exactly, we should increase the bands by exactly which amount. So basically, bands will increase by lower of gross PPC, and here we say higher of 3,600 is fixed, and the second is total of the relevant earnings. Total of relevant earnings. What comes in relevant earnings? Number one is your trading profit. Second, your employment income. And the last one is furnished holiday letting. So, for example, if your total relevant earning is assuming 1,50,000, then higher off is 150. If your gross PPC is 120, so you will increase the bands by 120. If your higher off limit is 90,000, gross PPC is 120, then basic and higher rate band will increase by 90,000, because the rule says bands will increase by lower off gross PPC. Then we compare this with higher of 3,600 and total of the relevant earnings. So students, I hope that every one of you have enjoyed today's the first class of Crash Taxation Finance Act 2024. The agenda is to discuss the entire course with you in a very short period of time. First two classes of the Crash will be uploaded on our YouTube channels everywhere, and rest of the classes they will be available to our enrolled students. Number one. Number two, I hope enrolled student, please listen to me carefully. Enrolled student, please do not leave even a single practice video. Do not leave. Yes, we'll be having a classes almost every day. And please do not leave even a single practice class. I exactly don't remember, but I think we have got more than 30 practice classes, including within the practice classes. I have discussed the entire pre-scene mock June 25. You can see that. We have already discussed the entire pre-scene mock of taxation June 25. And obviously, do not skip even a single practice class. So students, thank you very much. And tomorrow, again, the timings will remain same, 3 p.m. Pakistan time. So hope to see you all inshallah tomorrow as well. This PDF, everything will be uploaded on the portal. Don't worry at all. Do give the feedback on today's class. I hope that today's class was helpful.